Hello there, fellow investors. Iggy here, your friendly neighborhood investing iguana, back with another daily breakdown of the Singapore market. We've been crunching the numbers, racking up the watch hours, and keeping a close eye on the global economy to bring you the insights you need. Today's theme is a classic head-scratcher. Why do good company results sometimes lead to falling stock prices? Let's dive in. The Singapore market took a breather, with the Straits Times Index (STI) closing down yesterday. It seems investors are feeling a bit cautious, as even positive news from some of our favorite companies couldn't quite lift the mood. First up, we have SCA Engineering. The company reported a solid increase in net profit for the second quarter. Revenue was up and their joint ventures are doing well. Despite this, the stock price dipped before the results were even out. Iggy's take. This is a classic case of buy the rumors, sell the news. The market likely expected strong results, so the good news was already priced in. With the stock having performed well, some investors decided to take profits. The underlying business looks healthy, especially with air travel roaring back, so this dip could be a temporary blip. I'm watching to see if the price finds a new support level before making any moves. Next, let's look at Parkway Life REIT. The healthcare REIT continued its steady performance, raising its third quarter distribution per unit, DPU. Revenue and net property income also saw healthy gains. Still, the unit price fell slightly. Iggy's take. Parkway Life is known for its stability, which is why we love it. A small drop is hardly a cause for panic. The consistent DPU growth is what makes this a strong candidate for a long-term, dividend-focused portfolio. The market's reaction is likely just some minor profit-taking. I see this as a reliable workhorse in a portfolio, and I'm not troubled by these small daily moves. What's happening with Lendlease REIT? The manager announced a major move to buy the remaining portion of PLQ Mall that it doesn't already own. This will boost its total assets significantly, with a strong focus on the Singapore market. Yet, the unit price fell before the news broke. Iggy's take. This is a big strategic acquisition that strengthens Lendlease REIT's portfolio by giving it full control of a prime asset. The increased gearing is something to watch, but it's still at a manageable level. The market's negative reaction seems to be a knee-jerk response to the acquisition news and perhaps some concerns about the cost. I'm bullish on this move in the long run as it simplifies the ownership structure and should contribute positively to future earnings. Now for APAC REIT. They reported a small but welcome increase in their first half DPU. Revenue was fairly flat. The stock price didn't budge, ending the day unchanged. Iggy's take. No news is good news. In this case, flat is the new up. APAC is holding steady, and in a shaky market, that's a win. The slight DPU increase shows that management is still finding ways to deliver value to unit holders. While it may not be the most exciting stock right now, its stability is a comfort. I'm holding this one and will keep collecting my dividends. Finally, we have Manulife US REIT, which continues to face headwinds. Portfolio occupancy slipped in the third quarter, and gearing is high. The unit price fell another notch. Iggy's take. The U.S. office market is a tough place to be right now, and Manulife US REIT is feeling the pain. The high gearing is a major concern, and the falling occupancy is not helping. This is a high-risk, high-reward situation. For now, I'm staying on the sidelines until we see a clear turnaround in their operational metrics and a plan to manage their debt. Today's market action shows a clear disconnect between company performance and stock prices. Good news isn't getting the love it usually does, which tells me the market is a bit nervous. For retail investors, this is a time to be patient and focus on the long-term quality of the businesses you own. Don't get spooked by these daily price swings. Instead, ask yourself if the company's fundamentals are still strong. If they are, then these dips might even be a good opportunity to add to your positions. What are your thoughts on today's market? Are you buying the dips or waiting on the sidelines? Let me know in the comments below. And if you want more insights like this, don't forget to sign up for our premium newsletter.